What is online trading? Have you ever wondered how people buy and sell currencies? Stocks or even cryptocurrencies from their phones or laptops while sipping their morning coffee or taking a quick break at work? If you've ever thought, I wish I could do that too, then online trading might be the perfect side hustle for you. Simple, fast, and potentially profitable, but it's not for everyone. So let's talk about it. In this beginner's guide, we'll cover everything from what online trading is to what you can trade, how it works, and the risks involved. By the end of this video, you'll have a good idea of whether online trading is something you want to pursue. Ready to dive in? Let's get started. So what exactly is online trading? Well, it's just what it sounds like. Buying and selling financial assets using internet-based trading platforms instead of calling a broker. All you need is a device, an internet connection, and a trading account. But what can you actually trade? Plenty. Here are a few examples. First, there's Forex trading, which involves buying and selling currency pairs. For example, you could trade the euro-dollar pair, which is also known as the euro. In this pair, the euro is considered the base currency, and the dollar is considered the quote currency. The exchange rate between them fluctuates constantly based on various economic factors. Next, we have stock trading, which is buying and selling shares of ownership in companies. For example, you could trade stocks like Apple, Tesla, and Google. When you buy a share of stock, you become a part owner in that company, and you may receive dividends if the company declares them. Then there's commodity trading, which involves buying and selling raw materials. Some common commodities include gold, oil, and silver. These commodities are often traded in futures contracts, which obligate the buyer to purchase the commodity at a predetermined price on a specific date in the future. And finally, we have cryptocurrency trading, which involves buying and selling digital or virtual currencies. Bitcoin and Ethereum are probably the most well-known cryptocurrencies out there. The prices of these cryptocurrencies can be highly volatile, making them both risky and potentially profitable to trade. So that's what you can trade. But how does it actually work? Let's say you want to trade the euro-dollar pair, also known as the euro. You open a trading platform like MetaTrader 5 and open a position by clicking on the buy or sell button. If you think the euro will increase in value relative to the dollar, you buy euros. On the other hand, if you think the euro will decrease in value relative to the dollar, you sell euros. The price of the euro-dollar pair fluctuates constantly due to various economic factors, such as interest rates, inflation, and global growth. If your prediction is correct, you make a profit. However, if your prediction is wrong, you take a loss. It's important to note that online trading involves high risk and the potential for losses. It's not suitable for everyone, and it's not a get-rich scheme. Now that you know what you can trade and how it works, let's talk about the tools you'll need to get started. First, you'll need a trading platform. This is where you'll place your trades and manage your account. There are many different platforms available, each with its own pros and cons. Some popular options include MetaTrader 4 and 5, KTrader, TradingView, and NinjaTrader. Each platform has different features and user interfaces, so it's essential to choose one that suits your needs and experience level. Next, you'll need an account with a trusted broker. A broker is a company that allows you to trade financial instruments by providing a platform and executing your trades. It's crucial to choose a reputable broker with a proven track record, positive customer reviews, and a strong track record of regulatory compliance. Some popular brokers include Pepperstone, XM, FBS, and Vantage. Finally, you'll need some capital to start trading. Well, even if you're day trading, you'll need enough money in your account to cover any potential losses. The amount of money you need to start trading varies depending on the broker and the financial instruments you want to trade. Some brokers allow you to open an account with as little as $1, while others require a minimum deposit of several $100s. It's important to choose a broker that fits your budget and financial situation. With the right tools in place, you're ready to start trading. But before you dive in, it's essential to understand the risks involved. As with any investment, online trading comes with its fair share of risks and potential downsides. It's crucial to be aware of these before getting started. First, there's the risk of losing money. It's just like any investment. There's always the potential for losses when trading online. It's important to remember that you could lose all the money you invest. It's crucial to only invest what you can afford to lose and to never chase your losses. Another risk is the emotional toll of trading. It's not uncommon for traders to make impulsive decisions based on emotions rather than logic. Fear and greed are two emotions that can significantly impact a trader's decision-making ability. It's essential to develop a trading plan and stick to it regardless of market conditions. And finally, there's the risk of scams and fraud. Unfortunately, the world of online trading is not immune to scams and fraud. It's essential to do your research and only trade with reputable brokers and platforms. Be wary of anyone promising high returns with little to no risk, as it's likely too good to be true. Now that you know the risks involved, let's talk about why people trade online. For starters, online trading offers flexibility. You can trade anytime and anywhere as long as you have an internet connection. This makes it ideal for people with busy schedules or those who prefer to trade from the comfort of their own home. Another benefit of online trading is access to global markets. You can trade financial instruments from all over the world from your computer or phone. This gives you the opportunity to diversify your portfolio and potentially increase your profits. Finally, there's the potential to grow your income. With the right skills and discipline, online trading can be a lucrative side hustle or full-time career. It's not a get-rich-quick scheme, but it does offer the potential for significant financial growth. So now that you know the benefits and risks of online trading, here's what you can do to get started. Step 1. Open a demo account. Most brokers offer demo accounts that allow you to trade with virtual money. This is a great way to learn the ropes and practice your trading skills without risking any real money. Take your time, experiment with different strategies, and get comfortable with the trading platform before moving on to a live account. Step 2. Learn the basics of trading. Before you start trading with real money, take the time to learn the basics of trading. Understand the different types of financial instruments, how to read charts, and the factors that influence market movements. There are plenty of online resources and courses available to help you get up to speed. Step 3. Practice, improve, and go live when ready. Once you feel confident in your ability to trade, it's time to open a live account. Start small and gradually increase your investment as you gain experience and confidence. Remember to always manage your risk and never chase your losses. And there you have it. Everything you need to know about online trading. It's a potentially lucrative field, but it's essential to be aware of the risks and take the necessary steps to protect yourself. With the right knowledge, skills, and mindset, you can set yourself up for success in online trading. Do you have any thoughts or opinions on online trading? So, feel free to drop them in the comments below. We'd love to hear from you. Thank you for watching. If you found this video helpful, please hit the like button, subscribe for more trading tutorials, and let us know your questions in the comments. Good luck on your trading journey, and remember to always do your research and invest responsibly.